Hey, in this video, I'm going to talk about hobby income. Well, is hobby income why you need to know? Because, some people say, okay, I want to start a business. Then, but if you not make enough income, then, those expenses cannot be deducted if it's considered as a hobby. So let's read here. Say classification of an activity as a trade, business, hobby is important because it affects deductibility of losses. Specifically, if an activity is a trade or business, the losses are usually fully deductible. An ordinary loss can offset other taxable income. If an activity is considered by IRS to be only hobby of the taxpayer, the hobby rules are used. Under the hobby rule, the only expenses generally permitted are the cost of goods sold. So you can see here is hobby. If your business is considered as a hobby, so you cannot deduct that much expense. Then all your gross hobby income is reported on the other income on the IRS Form 1040. So you cannot use Schedule C because Schedule C allow you to deduct all the expense, income and expense, right? So the activity is presumed not to be a hobby if there have been profits from the activity in any 3 of the previous 5 consecutive tax years. So it's very important for your business to have a positive profit. So if you always produce loss in losses in 5 years, then if your business is considered as a hobby, so then you cannot deduct all those expense, right? So if you have a 3 out of 5 past 5 years you make a profit, you are considered as a business. You can use Schedule C to deduct expense. So let's see this example. Nim has been selling decorative poster online for the 6 years. So it is not his primary employment, but it has been doing very well. While he will be itemizing his deduction this year, he believes he can report his income and expense on the Schedule C. His gross sales from the poster are $56,500, right? Then, so you can see all those expenses here: cost of goods sold, supply, then web-related cost, magazine, everything, postage. So all those cost. So he has been kept all the detailed record from the beginning, then track the profit loss for the year 1. So year 1 has a loss of $5,000. Year 2 loss $2,000. Year 3 showing profit $9,000. Year 4 loss $500. Then year 5 was a good year, making profit $12,000. So you can see year 3, year 5, and the current year they have profit. So this is he is eligible to use Schedule C to deduct all the expense. So if he make a loss this year, so he will not be able to use the Schedule C.